Welcome to Team 3's audit plan for Procter & Gamble. The audit team includes myself, Alex Lombardi, George Fuentes, and Crystal Shimishagu. The first thing our team did was review the consolidated statements. Over the last 5 years, Procter & Gamble has demonstrated consistent financial growth with a steady upward trend in its core financial statements. Their consolidated statements of earnings shows that net sales have increased annually, rising from approximately $76.1 billion in fiscal year 2021 to $84.3 billion in fiscal year 2025. Net earnings have also shown consistent growth over this period, increasing from $14.3 billion to nearly $16 billion, reflecting enhanced operational efficiency and effective cost management. The consolidated statements of comprehensive income also shows that total comprehensive income has generally trended upwards, not including some minor fluctuations. The consolidated balance sheet indicates a stable and growing asset base, with total assets rising from approximately $111.9 billion in fiscal year 2021 to over $125.2 billion in fiscal year 2025. Total liabilities have also increased proportionally, but the company has maintained a healthy capital structure with more equity than debt, effectively managing its short-term liquidity and long-term solvency. Overall, the statements collectively portray a resilient and profitable company with a strong balance sheet.
In order to craft a well-structured audit plan, we must first understand the company itself. Procter & Gamble's organizational structure is comprised of sector business units, or SBUs, enterprise markets, or EMs, corporate functions, CF, and global business services, GBS. SBUs are the broad categories in which all Procter & Gamble products can be categorized into, and they include beauty, grooming, healthcare, fabric and home care, and baby, feminine, and family care. SBUs are responsible for a large majority of the company's sales and earnings. Enterprise markets are what deliver sales and profits in certain countries and are supported by SBU's supply chain. Corporate functions live up to their name, as it includes functions such as corporate accounting, governance, human resources, and IT, among many others. Global business services are what allow Procter & Gamble to scale their operations to world-class services and solutions. They are the tools necessary to enhance SBUs, EMs, and CFs to better serve customers.
P&G shows strong financial performance, with sales reaching over $84 billion and operating cash flow of nearly $18 billion. Net earnings rose to $16 billion, and the company has maintained dividend increases. When we compare this to Unilever, which also shows steady performance, we see that the industry remains stable. Based on the 5-year trend and competitor comparison, there are no indicators of going concern problems for P&G. P&G's executives receive bonuses based on earnings per share, sales growth, and cash flow. Tying compensation to performance can create pressure to achieve targets. Because of this, accounts involving judgments or estimates carry higher fraud risks. Examples include reserves, accruals, and revenue timing. These are areas where bias can influence results, so we apply greater skepticism when testing them. Critical audit matters from prior audits highlight the most complex areas of P&G's financial statements. Goodwill and intangible asset valuation rely on assumptions about future performance. Revenue recognition is complex due to the company's global reach and multiple sales channels. Inventory valuation is also a key area because cost changes and supply chain conditions impact results. These CAMs help us focus on testing and areas that require the most professional judgment. Supply chain disruptions can impact inventory accuracy and costing. Cybersecurity risks influence the reliability of IT systems and require strong access and change controls. Third party vendors may not follow consistent processes, raising the chance of errors. Currency fluctuations affect the accuracy of recorded revenues and expenses. Compliance with many global laws increase the risks of incomplete and incorrect disclosures. Each of these risks help us determine where controls must be tested more thoroughly.
The overall audit strategy for Procter & Gamble involves setting the scope, timing, and direction of the audit, guided by P&G's global operations, internal control environment, and key business risks. This strategy prioritizes areas with a higher risk of material misstatement, such as foreign currency fluctuations, supply chain management, and the valuation of intangible assets. The scope of the audit defines the engagement's characteristics, focusing on Procter & Gamble's complex global operations, including financial statement line items, geographical locations, key accounting policies, and internal controls over financial reporting. The timing of the audit is designed to be efficient and meet SEC reporting objectives, ensuring the timely filing of quarterly and annual 10-Ks. The direction of the audit sets the tone and focus for the engagement team, emphasizing risk and materiality. Our risk-based approach will include supply chain disruptions, foreign currency fluctuations, customer concentration, and intangible assets. We will also set materiality and resources necessary for the audit. Required communications with P&G's audit committee in accordance with PCAOB standards will include the overview of the audit strategy, significant risks, critical accounting matters, significant findings, independence, and results and other matters. Key factors directing the engagement team's activities stem from P&G's business model and risks, including global diverse operations, internal control environment, significant estimates and judgments, market and economic volatility, and prior experience, such as knowledge obtained from public information on previous audits of the company.
As noted by the auditing standard 2101.02, our objective is to plan this audit to ensure it is conducted effectively. To uphold this requirement, we will document the planned nature, timing, and extent of risk assessment procedures, test of controls and substantive procedures, and other procedures needed to comply with PCAOB standards. The plan established is subject to change based on the evidence gathered throughout. Risk assessment procedures are essential for identifying specific risks of material misstatement. The nature of our procedures will encompass inquiries with Procter & Gamble's senior management, internal auditors, and IT management. Here we will gain a preliminary understanding of the risks associated with the business as management knows it. We will also inspect documents related to major business decisions such as acquisitions. The timing of our risk assessment procedures are standard. The bulk of these procedures will occur ad interim, but will continue throughout the process given the iterative nature of our plan. The extent of our procedures will vary based on perceived riskiness. For example, Procter & Gamble's evaluation of impairment for the Gillette brand was previously assessed to be a critical audit matter. Given the critical nature, we will conduct extensive testing relating to all estimations derived for the Gillette brand. This includes tests related to determination of fair value and forecasting of net sales. There are two key areas in which we will conduct tests of controls. The first is entity level controls. The nature of these tests will include inquiry, observation, and inspection of documentation of ELCs. Timing will fall under the interim period, typically around October. There must be sufficiently extensive tests of controls to deem that the company is likely of detecting misstatements. The second control area to require testing is that of IT general controls, or ITGC. IT is essential to uphold operations, and given Procter & Gamble's global operations, its IT infrastructure will be quite complex. The nature of tests of controls will focus on inquiry, observation, inspection, and reperformance of many of the automated and manual controls related to IT. These will occur during the interim period as well and require extensive testing. Failure in this control area will result in a cascading effect requiring more extensive testing in other areas, even if they were initially deemed low risk. This is the direct result of the interconnected nature of IT. Now, given the highly subjective and complex nature of fair value estimations, a fair value specialist's involvement is a necessity. This is also featured in the PCAOB's auditing standards under 2101.16. A fair value specialist is particularly relevant for the Gillette brand, who, as mentioned previously, incurred a substantial impairment charge in 2024 due to a reduction of fair value. The specialist will aid us in independently evaluating the reasonableness of management's estimates and assumptions. To build up evidence, we will test the effectiveness of controls over management's development of future sales, earnings, and their selection of discount rates.
P&G's operations span over 70 countries, which means we must carefully choose which locations to include in our audit testing. Some regions show higher risks due to currency controls, inflation, or political instability. While many financial processes are centralized, local risks still influence where misstatements may occur. IT general controls become important because key systems support global operations. Our location selection is based on both financial significance and risk.